Welcome, everybody, to an SF Live breaking news special. We've seen the gold price crash this morning. We've seen the silver price crash this morning. And are we in the middle of a crash? Is this just a correction? Is this part of the norm? Should we get used to kind of price drops like that? And we'll be chatting with Patrick Kareem. He's the Bat Chartist on Twitter at BatChartist1. So make sure to follow him there as well. And I'm really curious to see what his thoughts are because I'm just a retail novice. I'm not a technical analyst. I just follow mainstream media, mostly some specialized industry news outlets, of course. But I really want to get some color on what is going on. And that's what prompted me to reach out to Patrick this morning and see, hey, are you available? I need to make sense of this. But before we switch over, let me remind you to follow us on YouTube, follow us on Twitter. It's we are live with our formats all the time. That way you do have an advantage when we go live. We interview lots of companies. We have experts on. Hit that little bell notification. Leave a like, leave a comment. We want to hear from you. That's all I can say to this. Now let's switch over to our guest, Mr. Patrick Kareem. Patrick, really appreciate you joining us on such short notice. How are you?
Hi, I'm great. Thanks for reaching out to me there. Appreciate that.
Oh, for sure. It's like I've been following what you've been doing is the last few months, and your channel has been exploding on Twitter at BatCharts1. It's great to see that because you provide lots of quality content and maybe some more technical, sensible analysis about certain price moves. That's why I reached out to you. It's like I need to understand what is happening in the market, in the charts, without the noise. Right? Like, let's cut out the mainstream media. Let's cut out the industry-specific news. I want to see what's happening in the chart. What can we expect? And we're going to talk about that in a minute. But first, I want to talk about yourself. Like who's Patrick Kareem? Like, why are we actually chatting today? And to give us a bit more background information on yourself.
Wow. Well, I started trading like most people that started, like, I think back in like 2006, trying to have some income. And what do you do? Oh, I have some spare money. Well, then you Google. Back in the days, you didn't have Twitter or anything like that. But the first thing say investing, and it's like whenever you go to a new country, never go to the first restaurant. You're in Paris, you're in Champs-Élysées. We call that the tourist traps. The first restaurants you see, they're usually the most expensive. And you get better deals, better food, like if you know how to smuggle your way around. And with the trading, it's the same thing. People Google, and the first thing they find, they go on Invest Hub or all these penny stock forums. It's a miracle that I didn't lose all my money multiple times, like in the beginning. And then I was lucky enough to read Stan Weinstein's Secrets for Profiting in Bull Bear Markets. Then there were notions of risk and money management that I got, how to write a stage, make sure you're on the correct, like how to identify where you are, the price action. Because if you don't know anything about charts, honestly, the first thing you're going to see, oh man, this thing is going to the moon. And usually that's a sign of a top or close to it. And then, man, when you learn charting and then, oh man, I bought at that area, that was like a clear sell. I was so stretched from the 1 year moving average. But honestly, like I don't know what's the percentage of people who don't do technical analysis, who have some money that they put for the first time. And it's insane. Maybe that's why it explains parabolic meltups, because they just pile on at total land, and it's total mayhem. But what I've learned, like from technical analysis, is you got to get in early. The earlier you are emotionally, after the first correction, and there's always corrections, it's much easier if you got in early than you got late. Because if you get in higher up on the fear of missing out type of breakout, the first correction, you're not going to survive it emotionally. Oh, what's happening? I'm down 20%, 30%. How could that be? Then you sell, and as soon as you sell, it turns around, right? You hear these stories all the time. But if you have a chart, you could situate you're like where you are, where you're buying. And even if you're buying on a breakout, at least emotionally, you know where you are. You could expect, okay, look, I bought here, but I'm keeping some bullets. It's going to go down, or it could go down 10, 20, 30% to this support level. And it's a lot easier to hold once you know where you are in the bull market. Are you in the first year? Or am I like in the 7th or 8th inning where the rug pull could happen any moment?
Yeah, let's look at that. The rug pull, right? It's like, and trying to make sense of what is happening in the market today, of course, and also putting it in broader perspective. Because I'm not a technical analyst, but like looking at it, like I learned the last couple of weeks that 1760, 1750 level is sort of an important support level in gold, and we broke through that tremendously. Like today, like with fury, right? Silver held up decently, so we're going to talk about silver as well. But let's start with gold, and I'm going to switch the screen over because you brought a graphic along as well. And this is the gold. Nope, that's the silver one. That's the gold's daily linear chart. Let's talk about it. What are we seeing? Should we be worried? Yeah, put it in perspective for us. What's happening?
Okay. Well, most people they look at the daily chart, so even smaller time frames. And if you look at that day on the daily chart, it's not you're in a downwards channel. You had a death cross, super scary word, but that means you're below a 50 and a 200-day moving average. And if you just look at that, definitely you're in a downtrend. You're in a stage 4 downtrend, so it's not somewhere where you want to buy at this area. But you can't see the way that the charts frame. You can't see really like a bottom, so it's very scary. You don't know how deep this is going to go. Where is my support? And that's where like multiple time frame analysis comes in, is because on higher time frames, more important time frames, let's say on the yearly chart or 6 months chart or quarterly close charts, you'll have some defined support, and it's invisible. It's practically invisible on this chart, but I that's why I had to put it there. I put a 1675 is also yearly defined wall. So wall is previous resistance you busted through, and now when you go and touch it, it's not resistance anymore. It helps support the price action. And if you combine that invisible resistance support, and then you're in downwards channel, and then you could even add an indicator to see, am I going to start creating a bullish divergence? So the price action shoots down, but the indicator refuses to go down lower. So it's showing, hey, look, the price action is exaggerating to the downside. If ever we start getting, let's say, a green candle on the price action, and the indicator, like in this case, I use the stock, starts turning around at a higher low, and the price action at a lower low, that's what we call bullish divergence. So it's a chance, hey, look, we might be feeling out a bottom at this stage. So those are pretty clues. I look in a downtrend to see where we could have a chance there of turning back up. So 4% day, you could see, look at all the previous times. It's done this many times, and then it rebounded back upwards. Um, it's part of a cycle. So if you want to just remove the noise, why gold's moving? Is it because of the rates? Is it because of Buffett dumping his stock, or whatever reason? At the end of the day, just look at the gold price chart, and it's going to tell you where it has a chance of turning back up.
Yeah.
So on the daily chart, definitely downtrend. But after that, we'll see there. If you zoom out, you'll see that this is just it's a good pullback within a higher time frame. It's like I told you, like maybe like before the call, you have to see that as waves. So back in 2018 or even 15, 16, it started. It was a small wave where we were starting to build bullish momentum, and then those small waves on the smaller time frames, on the weekly, on the monthly, they started turning up, and then it started creating a strong macro or strong tidal wave going upwards. And then it happens always when those waves get super big. On the smaller time frames, you have counter waves or counter trends. So it starts on the daily chart, on the weekly, on the monthly. But until those trends override the highest of the time frames, so let's say a quarterly chart or a yearly chart, the odds are that eventually the higher macro tidal wave that's going upwards will override these smaller time frame moves. This is the traders, they have to, or people invested, they have to understand what their time frame is. Are you a position trader? Do you want to ride the bull market from year one all the way to 2028 or wherever it may end? Or if you're a scalper, then maybe the yearly trend's not as important for you, and you're going to want to focus on these smaller time frames. So it's always like that. You have to understand where what's your time frame to get in and out, and then use the appropriate time frame. But on the general, if you want to judge the health of the bull market for gold, you can't just look at that daily chart, because it doesn't give you context, it doesn't give you nuance of actually what's happening right now to the
Yeah.
so are we crashing? It's a big word, but definitely on the longer time frame there, it's not I can't say we're crashing at all there.
Okay, so you're not worried at all, and it looks like you put in a 1675 line there. As long as that level seems to be holding, we are still in our upward trend. Is that sort of the bottom line? So it's not a crash until it crosses that line.
Well, it's even more delicate than that. I could even say it could even crash and go below that, as long as it closes the year. And that's why people don't have the patience maybe to hear this type of information. But as long as it closes the year above 1675, we're still in a bull market. So the price action could actually, let's say we have a crash, market crashes, liquidity crunch, and then everything sells off, and the gold dumps to 1575, 1550, wherever it may dump. That could be just a wick on the smaller time frames. Then the Fed steps in, they do whatever they have to do to prop up the markets, and then gold by the end of the year, it closes above 1675. Then when I'm going to show you a chart, then you'll just see a wick. So a wick on candles is just noise on smaller time frames. So the price action went down, but the buyers say, "Hey, look, that's exaggerated the selling pressure," and they bought up and they closed the year above that line. It's always a close that matters, where the market decides to close the week or the month or the quarter, and the higher the time frame, the more important that close is. So
Yep.
it could get a lot scarier than that. So a crash, price action could dip really low, but as long as it closes the year above 1675 or
Yep.
even the 6 months, I have it. I think the next chart is going to be like a 6 month candle chart. Then you're still in a good solid bull market.
Okay, so we were still in that bull market. Let's zoom in on today. Actually, so it's the month end. It's February 26th, last trading day of the month. What is causing that now, that drop again in gold price? We've seen, like, if you look at the chart, there's a couple of red candles, not just today, but the last couple of days were bearish. Like, what is causing the drop now? Is it just investors closing their positions? Let's zoom out and look at them. The reporting, is it bond yields going up? Is it big dollars moving back into the bonds? Now the 30-year treasury is at 1.6%. Like, whoop-de-doo, right? This is,
Yeah.
but like, where is that downward pressure coming from right now? Do you know?
Well, yeah. Well, gold has been tracking the real yields pretty accurately. So a lot of people looking at the U.S. dollar, et cetera, but gold has pretty much tracked real yields. And real yields, if you look at the 30-year real yields, the one that's less manipulated by the Fed, the one that's like really out in the curve, it they skyrocketed up the nominal yields on those 30-year since the bonds are crashing. But what you need is real yields. So those 30-year, they're going up, but the inflation expectations are adjusted. So inflation, those bond yields minus inflation is not sufficient to have real yields dropping. Real yields have been going up also. I think they're even positive. They were almost like minus 0.5% a little while back. And now I think the 30-year real yields are positive. So that's creating some good headwind for gold. As soon as gold senses that the real yields are going to start heading back down, it should turn back up. But I deep dived this a little while back, and this is the correlation that's happening now. But we got to be careful because we're in a disinflation since the 1980s. We've been in disinflation, and gold was started to rise in a disinflation since 2001 and went up because those real yields were going down. But there's moments back in 2004 or 5 where gold actually went up with real yields. There was a flip. I don't know, like, why does that? Maybe some macro guys could they could say, was it sensing what was going to happen after that? And even in the 70s, everybody says, oh, look, the real yields, they went down to minus, let's say, 4%, and gold spiked up. But just before that period, before all that extreme and negative real yields happened, gold actually went up with real yields at the same time.
Yeah. Yeah,
Yeah.
like,
So when you zoom in on
I'm
the
still
chart,
trying to understand, like, gold. It's so interesting, right? Like, I stopped, like, I wrote a newsletter before, and we were looking, and I'm trying to, like, talk a bit about gold, right? But not as an expert, just analyzing what is happening. And it was that day the U.S. was like a couple hours away from going bankrupt because they didn't extend the deficit, or the deficit ceiling. They didn't allow it to increase until, and gold was going down. I was like, this doesn't make any sense anymore, and I stopped forecasting gold prices and leave that to experts, right? And
well, that's why, because what we think makes it move is all the narratives, all those stories. At the end of the day, you have to look at the price action on the chart, and maybe with one or two instruments, see if there's really a strong correlation. But those correlations, they don't always stay. So on the smaller time frames, on the daily chart, like, it's not guaranteed that something's going to be moving gold in a certain way inversely to 100%, right? I think maybe if you want to go with the best like narrative, if somebody says gold is just a rock to put as a paperweight, maybe that's the best buying opportunity. Because I
well, I
talked to
got a
these old
copper
school
brick for
traders,
that. It's cheaper.
all the guys, the stories I hear, it's like when people says, a rock, like a gold's just a rock, then that's like a good contrarian. But yeah, seriously,
It's
you gotta look at the big picture charts and see what actually the market's telling you.
yeah. And
The
then
actual price action of the chart, right?
I'm going to put you a bit on the spot here because we're like looking at the chart is all like looking back in hindsight. Everything's 2020, right? Do you do some forecasting as well? Like now it's the month end. What are you looking at right now in terms of maybe future gold price development? Like what kind of trends are you seeing? Like where are we headed? I'm going to put you a bit on the spot here.
Don't worry, I do a lot of. Hold on, I'm back. I do a lot of. I like doing not forecasting, but measured moves because technical charts. Uh, its use also is to try to see what's the measured move, right? If the price action goes a certain amount down, usually there's a reversion to mean, and then you overshoot, and you could do measured moves, a whole bunch of different target techniques. And also in time, sometimes you get to see like angle of entry into an arc. Usually it's the angle of exit, so you kind of you could extrapolate pretty much where the area is. So what I do is I use a multiple range of, like, let's say, different techniques, and it's not precise. Like you'll see, let's say for gold, I have a 6,000 target 2023, or 2,300 target for, let's say, Q3 of this year. But the takeaway is, are all these targets close by? Let's say you had a scatter chart or a shotgun, you hit the wall. Well, nobody knows the exact future, right? The market, often I've realized, it takes more time to play out than what my imagination thinks. But am I in the ballpark? And the more shots you take, the more different techniques you use, let's say, to get a ballpark target, and then you get to say, okay, this could be my range. I have a whole bunch of targets. So for gold, and it's still on track. I have, for me, for this year in Q3, I'm pretty, like, the way it's still playing out, I think it's going to shine. And I have a 2,300 target for gold in Q3 of this year.
Okay, so you're still
So
pretty
I have a,
bullish on, like, with the sentiment. Like if you look at Twitter, if you look at all media, it's like, oh, gold is crashing, gold is done. Like all the crash profits are coming out again with gold dropping 3% today, right? It's like, oh, gold is going to 1,500. Maybe we'll see 1,000 again soon, right?
you heard they're saying that
Oh,
already?
you just got to go troll. It's like, because I'm trying to get some information on what is happening, right? And of course, people are saying,
Yeah.
"Oh, we're still bullish." Like, I just want to understand it, like from a technical perspective as well. Of course, macroeconomically, if I look at 1.9 trillion dollars being printed in the U.S. this year, like that stimulus is most likely going to go through. Like macro, we are on the right track. Like I don't see why gold should be lower. Like I'm not calling
Well,
for
you got
$3,000 gold. Like I'm actually happy with 1,800 at this point because gold has come up quite a bit. But
yeah. Well,
just trying to make sense of it.
that's why you got to be careful, because I always also try, like, it's a gray cloud. What if gold's move from 1,200 to 1,800 or 2,000 was actually it discounting the trillions coming out now? Maybe gold was already starting to figure out, and the market was discounting the probabilities of the actual stimulus, which is not, that, like, buy the rumor, sell the news type thing. So you got to be careful. Maybe gold's. I have some charts. I didn't share them with you, but gold, it could have already digested all the stuff, and it's probably maybe actually waiting for um, the next move
Yeah.
after that. It's a curious horse, and we're like humans, and we always try to rationalize, and we like, let's say, people have money invested in gold, and they have to try to find a story which could make them sleep at night.
Yeah.
Why
We're
are they
always looking for
holding on?
like confirmation bias, right? Like something that fits our narrative, right? And
Yeah,
those stories get published. Of course, we all want to see a higher gold price. But as you said, I think that's a really good point. Maybe all that $1 trillion printing is already priced in. That's why we are at 18, or what is it, 1730 this
yeah.
today, right? So, and I asked somebody else the other day, are we too greedy in gold? Like, are we too greedy? You like asking for 2,300? Like you mentioned 2,300. That's why I'm picking it up. Like, are we being too greedy, calling even for that? Right? If it's supported by technical analysis, I think that's different. But just in general, like, are we too greedy as gold investors?
Well, if that's a question, I don't think we're too greedy at all, because for the cycle, for the, let's say, the precious metals bull cycle, it started, and it's supposed to end in, let's say, 2028, maybe with a drawdown. Usually there's lows. to the in the November of 2024, let's say the presidential cycles. You could check out the North Star charts on Twitter. Kevin, I do a lot of work with him, and um, so other than that drawdown in 2024 and the end of the cycle in 2028, you could expect this is going to keep going up and up. It, it's just that our time frame, like we always have targets. As I say, I tell you 2300. Your brain has a hard time imagining drawdowns and the emotion. We want to avoid that pain. So we just imagine a straight line. That's why we fail. Humans are awful traders. We just, oh man, Bitcoin's going to a million. And sure, it could go to a million, but people are imagining straight lines and they're imagining the speedboat and the mansion and all that. And all that emotion stuff, whenever there's a drawdown, it's game over for you.
Yeah.
It's game over because there's 20% drawdown. You're not breathing properly. You're scared to tell your wife. You know that
Yeah.
all these
Well,
things. They
Bitcoin is a
just
great example because we dropped 50% in the meantime. Like it dropped massively when we hit 20,000. It dropped all the way back down. It was more than 50%. I think it dropped down back to $5,000 or something. Right. Well, somebody bought
yeah.
at 20,000 at that time. It's like somebody marked that top. I'm not sure how that person feels right now. All right, now he feels probably better, but at the time, he was probably in a world of pain. We're getting a bit off topic, but let's quickly
Yeah.
touch on
Sorry.
silver as well, because silver has seen a big drop today as well. And you brought us one more chart, and I'm going to flip to it real quick. And that's this one. Let's quickly talk about silver, and we put it a bit on the back burner because it didn't break like initial technical, like short-term support. It's still sitting above that 2680 line, I think it is. So let's look at silver, and what are you seeing there right now?
Okay. I always try to find analogous moves, behaviors, but not too much, not too many instruments, but just let's say gold and silver, they usually behave, they react different, similarly, but at different times. Let's say gold usually broke out early, like in 2019 in July or June, and it opened the gateways for the rest of the commodities. So I was trying to figure out how did silver behave previous to bear markets or huge drawdowns in gold? And if you look previously, uh, silver usually is a lot weaker than gold. So before, let's say the 2008 market crash, I marked it. Silver and gold are tracking pretty similarly. But after that, when there was a real serious move down, silver just got sold off. There's an issue. There's something bad that's happening, and it showed a lot more weakness than gold. And gold got a bid, and you could see that on in these quarterly charts. Very important, always, like if you want to zoom out to quarterly charts to reduce a lot of the noise. We're not seeing that now at all, and we're not seeing that in the commodities. Yes, they're pulling back 2-3%, but silver is still very close. It's closer to 28, where it's its breakout. I think it's at maybe 26.50 now, 26.40. It's closer to 28 than it is to 20. So you still got to look at that. It's still hanging on close in the striking zone to try to go up above and have eventually, not this month, but maybe next month, a quarterly close above a 28. And look at that. Always a lot. I saw the charts coming back out today. Like, is this a 2011 to 13 top? Or are we having gold? It looks a lot alike. If you just look the structure on the monthly chart, even it looks alike. But if you take some context where you were in the cycle when that type of structure happened, you had a bull run from 2001 all the way to 2011, 10 years in. So those type of structures have a good chance, maybe, yeah, of deconstructing and prolonging you in a bear market. But right now, we're just starting off the bat. And silver, for me, as you can see right now, like we didn't even have our blow off top. I made a joke of it, like silver always ends in a parabolic melt top, right? If it's a true bull, if this is a true precious metals bull market, silver should end parabolic and crash, and gold should still keep grinding up and showing a resilience. Well, for me, silver didn't. It didn't even try yet to do its parabolic melt up. Copper did. Copper's already leading the way, starting moving up strongly. But for me, silver is just hanging in there. Whatever news, whatever, it's resisting very, very well to those real rates going up, to those nominally bond yields going up. It's kind of sniffing whatever. It's kind of like seeing, and that's dangerous. Like me trying to fit a story or a narrative on top of it, but it's kind of seeing its relative strength. It's kind of seeing past um, whatever's happening now to the bonds, which should drive it lower, but it's not. And look at that 2011 silver, man. It just started crashing months ahead of gold, and now it's the opposite. So for me, like a type of conclusion, putting that in the weight of evidence, and especially maybe the next chart I'm going to show, gold is actually has led so hard ahead of everybody above its all-time highs. Right now, it's pulling back, and I can't wait to see the quarterly close. So end of March. Now we see a strong red candle when I took that sprint screen, but that could end up just being a wick at the bottom, and gold could be closing up a lot higher the quarter. So you have to let those macro tidal waves unfold. You have to let the market digest whatever news is coming up, whatever fiscalist is coming up. All that stuff is going to play out. But if you look too close on the daily chart, man, you're gonna get destroyed.
No, no,
And look, you're
that's
still in that trend.
that's a great comment actually, right? Like that's why we're having this conversation because we all hear this noise, we see what's happening in the news, like the U.S. is attacking or bombarding Iranian troops in Syria, so we have all these macro influences that take away from the basics, right? That's why like I brought you on as a chartist. Like, what are the charts telling us? It's like what is the truth? Like, I'm trying to get to the bottom of all this, and that's why I really
Right.
appreciate your insights, Patrick. And I also hot seat again. Silver price development for like let's say till the end of the year. Just trying to get a bit of a sense where you see things heading. I sort of heard it out like out of your comments, like you're still positive. Silver's trying to
Yeah.
break out to the upside right now, but where do you see things maybe end at the end of 2021?
Silver, I'm still expecting fireworks for 20 for Q2. So right now, this we're setting the stage. As long as we stay close to that striking zone to try to close above 2028. After that, because silver, it spent most of its time. It's not as $40 or $50 all-time highs are important for silver. Its all-time highs for me, yearly based, yearly close is around 28.30. It's never closed, I think, a yearly above 30.50. So that's the target for me. If we get to close above 29.30, that's when it should really explode. And I have some charts that so Q2, I think silver is going to get above its 30, and even it's going to vacuum up maybe to 45, and then come and retest at 30, slumber maybe for Q3, let gold do its thing. And Q4, I see silver jacking up and then going a little haywire. uh, I think I have mid 60s, maybe overshoot to
Yeah.
80
Wow.
by the end of the year.
Wow, that's a lot of
So
volatility for a precious metal, right?
well,
Or industrial metal, depending on what side of the trade you're on, right?
yeah.
That's a lot of
Well,
volatility.
that's the way silver is. It's in its DNA. If you look back in the 70s, all the way through history, silver has always been like that. I don't know why. There's probably some dynamics of supply, demand, exploration, under capitalized, whatever manipulations is crunching the price down. And when that all alleviates, then it just rockets up.
Yeah.
So yeah, silver is definitely not a monetary metal as much as gold. Gold is like it's like a currency. It's traded like a currency. It doesn't fluctuate a lot. But silver, it's a wild horse.
No, it's just try not to fall off when it bucks, right? So,
Yeah,
fantastic, Patrick. Really insightful. Really appreciate you joining us, and thanks for coming on. We need to do this again very
yeah,
soon. So, thanks for your time, and everybody else. Follow at BatCharts1. The name is here in the ticker, in the title here below Patrick. So make sure you follow him on Twitter. You get tons of knowledge from him, and be great to have him back on soon. And thanks for watching. Thanks for following us. This was an SF Live breaking news special, trying to make sense off the gold and silver sell off this morning. And really appreciate you following us on Twitter and YouTube as well. Leave a comment, leave a like. We want to hear from you. And we'll be back next week with more commentary and insights. Thanks so much, Patrick. Have a great weekend.
cool. Thank you